Start recording. Excellent. Good afternoon, everyone, and welcome to episode 8 of Afternoons with Aces. We have Oracle Application Ace professionals Thomas Simkis and Lee Briggs presenting income statement actual versus budget and trend. This is, as I said, the 8th in our series of cloud reporting sessions. We have 3 additional ones that are scheduled, and they will be delivered at some point in the late summer or fall. Go through our agenda real quick with us today. Just as an FYI, everyone, we are on a Zoom session. We will be in listen-only mode throughout the entire conference. If you do have questions, please use the chat feature or the Q&A feature, and Lee or I will do our best to get those questions answered real time. If there is a question that for some reason we're unable to answer, A, that would be shocking, but B, if it does happen, we will certainly get back to you guys at the end of the session.
I apologize, people. I'm getting squashed out of the room with the size of the ego.
Oh, it was funny. It was funny. All right, we're going to do today. We'll do introductions. We will introduce ourselves and a little bit about the series. We're going to talk about how to access the Financial Reporting Center, how to launch it. We'll talk about the report components. Lee's going to cover the dimensions, and not sure how the slide moved forward, but it did. We'll go through the general building of the financial reports that are in scope. So with us today, we have Lee Briggs. I am Tom Simkis. I am the director of the commercial and SLED practice for Creel Consulting, an SMX company. I've been here since 2017. I have my Bachelor of Arts degree in Economics and Business Administration from Ursinus College, and a Juris Doctorate from the James A. Beasley School of Law. I got my Oracle ACEness in 2014. They just extended that. I think we talked about that last time. So Lee and I did enough to maintain our ACE professional status for another year. So we're still ACEs as of 2024 and into fiscal 2025. I was the Oracle Applications Star Presenter of the Year in 2017. You will notice, and if you don't notice, Lee will certainly point it out, I got both of those lovely affiliations well after Lee did. I've been doing Oracle for a long time. I started out as an end user. My first professional job, this company called Renal Treatment Centers, all the way back in 1995. We implemented Oracle there in 1998, and I've been doing Oracle either as an end user or as a consultant ever since. Lee, you want to give your introduction?
Absolutely. Thank you, Tom. Good morning, good afternoon, good evening, wherever folks are. My name is Lee Briggs. I'm the Cloud ERP Team Director here at Creel, fully owned subsidiary of SMX. I've also been here since 2017, about 6 months after Tom started. I think that's the only one who actually beat me on. I got my degree in accounting and finance from University of Leicester, back in good old Blighty. Got my master's from the University of Northampton, back in good old Blighty. Worked with Oracle since 2001. I did EBS for the first 12 years, and then have focused primarily on cloud since 2013, when cloud became generally available in the financial space. I got my Oracle ACEness starting in 2013. Again, I've maintained the ACEness each year since then to keep that. And as Tom said, we've earned our ACEness again. You have to keep getting it every year. So the calendar rolled over for June. I got my ACEness again in June. Happy for that. And I got my Star Presenter of the Year from the OATUG in 2014, the first year that the award was out there. Tom, do you want to go through let's go back to the recap maybe of what we covered in a couple of sessions back in the day.
Sure, Lee. So we covered this in the initial webinar that we did, and we actually did a brief review of this on the last webinar. So a complaint that was existing about the Oracle applications a long time, certainly in EBS, and even in the early days of cloud, was that there weren't any seeded financial reports. That is no longer a true statement. Oracle came out with this feature actually a little while ago. I want to say at least 4 or 5 releases ago it's been out there. But there is a generate financial reports and account groups from the scheduled processes in Oracle Cloud. And if you set your hierarchy up in the proper format, you can get some really nice account groups that are available from the Account Monitor. And you can also get some financial statements. You can get an income statement and a couple trial balances. The last session that we did, we went over the trial balance and how it's built. This session, we're going to go over the income statements. So the 4 income statements that are highlighted in green, it's called income statement, consolidated income statement, rolling quarterly income statement, and rolling monthly income statement. are generated by the Oracle applications if you run that process. That does give them a name. I think it gives them a name with the period that you run the report, as well as your cube or your ledger. So it is personalized. If you've got multiple ledgers or multiple cubes, you will get multiple versions of this report. When you run the report, one of the parameters is indeed the ledger for which you're running it for. The nice thing that this does, it also creates your database connection. If you're not familiar with Oracle, or if you're familiar with Oracle and you're not sure what that is, when you connect to the Financial Reporting Center, whether you're connecting to the financials cube, we also noted in the last session, there are additional cubes that are out there. There are cubes for cash management. There are cubes for project accounting. There's actually a cube for fixed assets. You have to give those cubes a name that is meaningful. I've seen a lot of people give those cubes a name of like prod, which is bad because when you clone prod to dev, it says you're still connected to a prod cube. So Lee and I always used to give them a name of a financials or projects or whatever, but if you run this report, it gives you a database connection, and that database connection gives you the ability to migrate these reports relatively easily from one environment to the next. All right, so how do we access the Financial Reporting Center? Assuming you have the right role and privilege, you navigate to others. The first thing you do, is you select the hamburger, as it is lovingly called, is those three lines to the left of the Oracle tag. You select others and then Financial Reporting Center. This will open a new window. Bear in mind, you have to have pop-up blockers either disabled, or if you have them enabled, you have to allow pop-ups from this particular site. When I say this site, it is your cloud environment. Okay? So you have pop-ups enabled, that opens a new window. You then can select Tools, Launch Financial Reporting Web Studio. A quick public sector announcement, excuse me. I've been doing a lot of public sector bids lately, folks. Public service announcement. The Financial Reporting Studio tool used to be a client-only tool. It actually looks very similar, even though it is now a web tool. It was available in the web about 4 years, I want to say. I'm not 100% sure of that, but I'm pretty sure it was 4 years. It was available as a web version before it was available as a web version on ERP, which means if you were using Oracle EPM, you could access the web version. If you were using Oracle ERP, you could only use the client-side install, right? So a couple of years after it came available, Oracle migrated over to ERP. Why am I bringing this up? There's a new reporting tool that's available in EPM. It's literally just you access it from EPM, from Tools, Reports. It looks similar to FRS, Financial Reporting Studio, excuse me, but it's a lot more friendly. It allows you to do a couple things as far as the formatting goes, and as far as just typing things in that you really can't do in Financial Reporting Studio. So if you have EPM and you want to get familiar with that tool, you can. It's just called Reports. It's a really nice flavor, and I bring it up because I expect that we'll be seeing that tool be available in ERP. I have not seen it in any of the release notes yet, so it's probably not coming out in 25, but I would suspect in 26 it would be available. All right, so you'll launch Financial Reporting Web Studio, and you want to create a new report. You navigate to File, New Report, and that's going to open up a template that you can utilize, and you got various components to that. So when you open it up, you have something that looks very similar to this. If you notice, there's 3 components that you can see on the left-hand side. You've got a header, you've got a body, and you've got a footer. You can create those all individually, and there are prompts and there are variables that you can use that are specific to those areas that allow you to make the report more usable, more user-friendly, and of course, more versatile.
Yeah, and we're actually going to cover how to do the header. We'll show in this session how to put a header in there and actually refer to something in the report. So let's have report run as of whatever period you're running it for. We'll show how to put that in the header. I would show you how to do it in the footer. It's exactly the same as the header. It's just at the bottom of the page. So you get the idea for that. You've used it in one place. You've used either a header or a footer. You can use the footer or header as you go through.
Okay. All right, so in the body section, and that's really what the the main focus of this section is you click on the plus sign and you get to do a few things. You can add a saved object. A saved object can be another grid. So if you want to create what you would consider a template, I will liken these templates to row or column sets from the olden days of EBS. So if you create a row set that you want to consistently reuse, You can save that as an object and move that across different objects without having to rebuild it. If you want to create a grid is where you will do the actual building, if you will, of the nuts and bolts of the report. You can then build a chart. You can put an image in, or you can put text. You can certainly do those things in the body, but I typically will put the images and text files in the header or the footer to make the report look professional. Note, when you create your grid, you have to select your data source. If you have already run the process, there's going to be one out there. If you have not, you will have to create it. If you have multiple cubes, there will be multiple data sources. Why would you have multiple cubes? Assuming you've got privileges, you could have multiple ledgers. You could have multiple accounting calendars. If you've got any, I'll go back to kind of the old 4 C's from the EBS days, and of course R12, it's true in Oracle Cloud. Currency, chart of accounts, calendar, and accounting convention. If you have a different default calendar or a different chart of accounts, you're going to get a different cube within the Oracle environment, and so you can actually see that in the demo instance here.
And one of the cool things you have about this, and we've been very deliberate with our phrasing, we're saying for the grid, it's not for the report. So to Tom's point, you can actually have 2 grids on a sheet of paper. And again, if you every time I go for that create new report, you see a sheet of paper, how this is going to get laid out. I've seen some companies actually have 2 grids on the page at the same time. One client we had a few years back had an income statement and a balance sheet on one page. Balance sheet on the left, income statement on the right. That kind of thing, again, it's easy enough to do, but if you had different charts of accounts, maybe you're doing accrual convention and cash convention, you can actually have the same, you can have 2 grids on the same page, one looking at accrual, one looking at cash. Again, it's just some of the functionality that you could use, not necessarily saying you have to use it, but it is available for you.
Thanks, Lee. All right. Once you create that grid, you get this look. Okay, this is your dimensions. Again, we reviewed this last week, or excuse me, 2 weeks ago when we did the trial balance, but it's really kind of key to understand that point of view, anything that's in that point of view is user specific, right? So that means you could create this report, anything that is in that point of view. I could run the report and look at one piece of information. Lee could run the exact same report, look at a separate piece of information. As long as roles and privileges are locked in, we get to change those things. If you put things in the page dimension, you get to select from lists depending on how you build the report, but you don't get to change it, right? So if you want to kind of lock the report down to a predefined list of values or list of components, you can do that by putting them in the page, the row, or the column dimension.
Yeah, when we looked at the trial balance last week, that was one of the things we looked at. We put company at the page level. I think we said all companies, and then children of all companies, or maybe it was just, children of all companies. So you're getting multiple pages. First page has all my companies, so a total of it. Then you get here's company 1, here's company 2, here's company 3.
Exactly right, Lee. So in a typical financial report, I say typical because obviously you can do these things a million different ways. You'll have your accounting period either at the point of view or the page level. You'll have your ledger at the page level. If you want to have multiple ledgers on a report, you could have it in columns, you could have it in rows, but you would typically see your accounts down in the row level and your periods, your companies across the top. So you get a consolidated report. You'll actually see that when Lee builds the income statements or show you how the income statements are built that comes from Oracle. The nice thing about the web tool, it's a little bit nicer than the client-side version was. In the web version, when you select an item, you can actually drag and drop it and move it around. It's pretty flexible. It's a little bit more flexible than the client-side version was. But what the point of this is, you take your first cut at how you want the report to look, and then you drag things to where they will cover. A core tenet that Lee and I have, and you'll see that as we move through this presentation, Lee and I are firm believers is that you want the fewest number of rows and columns that you can possibly have and have the report do what you want. Why is that? The more rows and columns you have, the more you can get in trouble from a formatting and presentation perspective. When I say get in trouble, I mean just complexity. One of the biggest reasons that people have multiple rows is they want different formatting. I tell an anecdote from a couple of years ago, and this was actually at the very beginning of Cloud. I had a resource that wanted the report to look like green bar, and I had to manually format the alternating rows so that they were green barred. So we had like a number, like I think that the report was like 150 rows. I will tell you, I don't know that we'll cover it in this section, but there's a really good note from another consulting partner. I want to say, well, I'm not going to say the name because I'm not sure who it was, but I will tell you that they put out a really nice post on how you can put some additional columns in, and using conditional formatting, you can get the rows to format alternating colors if that's meaningful to you. We have a client that we're working with now that was very meaningful to. And so if you know the conditional formats are really powerful, and you do a lot with them. So to that end, conditional formatting in Oracle Cloud ERP, balances have their natural sign by default. What that means is that Oracle knows that the natural balance of a revenue account is a credit, which means when they show up on a report, if you select a period to date activity, a credit balance, which is a good thing, will show up as a negative. Okay. If you're an EPM person, a lot of the EPM users will flip the signs when they load their trial balances into EPM. As you guys have known, if you've ever heard me on prior webinars, I'm not a fan of that. I've never been given a good reason for why you would do that, other than you create your reports in SmartView and you don't want to flip the signs. This tool is available in SmartView, excuse me, in EPM, so there really isn't a good reason to do it. I'm not a believer in it. And what this allows you to do is using conditional formatting. If you're building an income statement, which is what we're building in this session, you can put a conditional format and just say, hey, I'm going to put a format on my accounts. And if it is a non-expense, meaning if it's a revenue or anything else, we can put a conditional format in to do some different things. And what we do here is we say, hey, if it is a non-expense, put a prefix in, put a suffix in. So I got the open and closed parentheses. I'm going to say display in red and format it, scale it by a -1. So all that means is I'm going to change the sign. It's still going to behave as a credit, right? So what that means is if I add a natural revenue account to a natural debit account, so if I add revenues and cost of goods sold, it's still going to subtract one from the other because that's how a debit and credit would behave. But it still presents as a revenue would present as a positive sign. And if you had a negative revenue amount, it would actually display as a negative. So that conditional formatting does a really nice job, and you can put that on. And then if you put that on your first row, any additional rows will inherit that formatting.
So one of the things that is a small gotcha on this, and the first time you do it, it's like, no, Tom said I could do it, and I can't select -1 there. You're going to see in that field that Tom's referring to with a little red box around it, -1, there's a drop down there. That drop down doesn't have -1 available to you. So you'll see it has 1, it has units, it has percent, millions, trillions, billions, thousands, whatever. You can just type in there -1. It's going to say, you sure about this? Absolutely. But that's the functionality you're looking for there. So just because you see a drop down and you see values in here, doesn't necessarily mean that's the only thing that you have available to you.
Thanks, Lee. All right. Next thing we'll talk about is a variance column. I'm talking about variance columns mostly because we're talking about things that we see people do mistakes, if you will. So there is a percentage variance column in your drop-down list, right? So you can select a percentage variance column, and it's a pre-calculated field within Oracle Cloud ERP. It's also available within EPM. I will tell you that when I use that column, I get inconsistent results on my formatting. It doesn't always give me the results that I want. What I mean by that is using that column, I sometimes get things that should be a positive variance show up as a negative, and things that show up as a negative variance show up as a positive. And you know, you can certainly fix those things with cell level formatting or various formatting, but I really don't like to do that. I really like to have my I really like to have it be done you know, by the system. So what I have found is that if I put the formula in, rather than putting in variance A comma B, I just put a formula in of A minus B. And again, these are my actuals minus budget divided by A. If I use that formula, I consistently get the results that I want. Meaning, if my revenue is lower than my budget, my actual revenue is lower than my budget, I get a negative. If my expenses are lower than my budget, I get a positive. And so I don't have to do anything flipping signs or whatnot. I do get the right thing. I will tell you that you do need to format column D as a percentage, right? So all my formatting that we showed in the prior screen was done at the row level. Once everything's right, I do formatting at the column level. Another thing I would tell you, and my comrade Lee Briggs here always says this, don't go crazy with the formatting at the outset. I will do my conditional formatting to get my rows, and just because the way my mind thinks, I want to make sure my positives are correct, my negatives are correct, and my numbers look reasonably good. But I do not go crazy with formatting as far as bold or underlines or until I get the report that ties and does what I want. And I certainly do my percentages last, just because having done this for a long time, almost invariably speaking, I'll put a format in there that's incorrect, and then I've got a lot of formatting, and it really gets confusing.
Right, and then when I give these training sessions, I actually take it one stage further. I don't do any formatting until I get my reports right. So I want to make sure my math works, because you're doing math with the real signs out there. So again, revenue, if you're thinking of a true income statement as you look at it, as it is printed out, it's revenue minus expenses. The math is always going to be, when you're building the report, add them together. But if you keep the original signs, you're going to get to, yes, add them together. I see the number is correct. The sign's wrong. It's correct. And then I put the conditioning formatting over there. Again, it really helps see, are you an accountant? Are you building reports? Trying to get that level set correct. Get the numbers right, then worry about making it look prettier.
Okay, thanks, Lee. All right, so if you notice in the screenshot here, I've got a children of all corporate accounts. So I'm just using a function to do an expand. And you know what the focus of this is going to be is really how you can get the most bang for your buck out of a single line, right? So for the example, you're going to see we turned off the suppression of zeros. So you might not want to do this. In reality, if you've got a zero line, you probably don't want it to show, but we wanted to show you what it looks like. What can you do using one row? Okay, again, the goal should be as few rows as possible. This is a Tom Simkus and Lee Briggs tenant. It doesn't mean that you have to do it that way. You could get 10 other consultants on here and they would tell you that they want more rows. I will tell you that using one row does limit your ability to do certain calculations. So if you've got a complicated P&L with percentages off of other fields, you're probably going to need a row for the accounts and a row for the totals, which is fine. It's not that complicated, but our core tenet is when I try to build these reports, I want as few rows as possible. And that's really what we're focusing on here, okay? So some key settings at the dimension level. We're going to show the member name. What that means is when you create your Oracle Cloud ERP, and Lee and I talked about that, your member name is your account value, okay? If you have the alias, that is essentially your description. So your member name might be, 10,000, and your alias might be cash. What a lot of ERP firms will do, and I say ERP firms, I mean loosely, because when we see folks do this, it's people that don't know what they're doing. There's a profile option that you can set in Oracle Cloud ERP that will concatenate your member name with your member value. And what that does is it ensures uniqueness. In Oracle Cloud ERP, you cannot have a duplicate description. If you do, the cube will fail to deploy. So because you can't create duplicate values when you create Oracle Cloud ERP, if you concatenate your value together with your description, you ensure uniqueness. The better thing to do is have a good implementation partner that takes a little bit of care and will do the due diligence to make sure there aren't duplicate descriptions. Assuming you do that, you can show the alias name by default. So your basic options, you might want to check to suppress zeros or suppress them with missing. Again, we did not do that in this situation, so that you can see it. But the other thing I did is for this particular line, because I'm selecting all the children by default, I'm not going to allow expansion, because if you allow expansion, you can't use auto calculations. What's allow expansion mean? Allow expansion means is if you have a parent for cash, and you only show cash, and you don't select all children, you just select you just select the parent cash. You get a little caret right next to that cash on the report. And you can click that and it will allow you to drill down to all the children. The way we built,
I'm sorry, let me get a clarification. It allows you to expand it out.
Thank you.
To show the children and their balances. Doesn't necessarily allow you to click into it and see the detail, but it allows you to expand out and say, here's a cash account 1 balance, here's cash account 2 balance.
Yep, thanks, Lee. The allow drill is a different option that you can select when you do the dimension layout. But we're going to say don't allow expansion. Why is that? Because I'm going to have them expand already because I'm using all the children of the parent. So I'm going to put an auto calculation in, okay? And so I select that auto calculation button and then I can set it up so that I have a different formatting when it's a total, right? So I can say, hey, I want a blank row above, I blank row above, and in my group heading, I'm saying, hey, put the word total. Okay, and if you notice at the bottom on the right-hand side, I say formatting may be applied through conditional formatting. So I can put conditional formatting to say, hey, when you see the word total, make this line bold and maybe put some underlines or some lines around it and just make it look a little different. Okay, and so if I do that, I'm selecting my row accounts. I'm saying, hey, get my children, and that's the function that you saw 2 slides back. Get the children of a particular account. So I'm getting all corporate accounts of revenue. Okay. And then I'm saying, hey, I've got this additional formatting I want. And when it's an auto calculation on account, if it's true, do a little different formatting. If you notice, the formatting looks very similar, but the difference is I made it bold, and this is key. The formatting has to be different. If your formatting is exactly the same as your first conditional format, you're going to get an error message. Say, hey, if you want to use conditional formatting, that's all well and good, but it's got to produce a different format. Otherwise, it doesn't let you save it. So what's my difference here? I'm scaling it still negative because it's a non-expense line. I'm just having it show bold. That's the only difference. That's all we're doing on this single line. Okay. So this is my line. If you notice, I've got those slightly green check marks in the upper left-hand corner. What does that mean? It means that there is conditional formatting that is applied to this row. If I had regular formatting on this row, it would actually be a blue highlight. If I had cell formatting, meaning formatting an individual cell, it would actually have a purple red type highlighting in the upper left-hand corner. So what's the output look like? I've got one row. It says total above it because that's what I asked it to do. I could have had a different row total up there, but I just selected. And there's my row total. Okay, I got a blank after my row expansions. This particular environment has my name concatenated with my description. And then I've got a total. And my total is, there's my $20,000 total, and I've got my 100% variance, right? So again, I got a single row, but I got all these different accounts. So I got a decent looking P&L out of the box. Didn't have to do a lot with it, and I've got a single row. And if you also notice, I put an additional row in here that I didn't have slides for that just showed some expenses for cost of goods sold.
Yeah, so you're going to see there are a ton of zeros on there. Again, we knew there were a ton of zeros because we said we don't want to suppress those. In reality, if you're looking at this report, maybe you want to see those zeros, and it's zeros all across. The other important thing, it's zeros across the board, right? So if you've got if you've got 6 columns out there, one row with 5 zeros and a number, it's going to show because one of the columns has a number in there. So if that suppression, again, take your chances with that suppression for what you're looking for. The other part is this critical? Is this a critical value? If I see stationary is 0 bounce, I don't really care about it. If cash is 0, I want to see it every time because that is probably a problem out there. But this snapshot we're looking at here was looking for, as Tom said, it is one row for revenue. Get all the children from whatever that revenue account is. That's why you're seeing about 15, 16 lines out there, all with 0 balance, one with 20 grand out there. It is a revenue account. It's showing us positive we have out there. And the auto calc is coming in with a total and it's bolded out there.
All right. So what I'm showing here is what I would do with an expense line if I didn't do conditional formatting, right? So we already did this. It was not required, but if I didn't do conditional formatting and I just wanted the expense formatting, what would I do? Well, I would scale it by +1, okay? I would still have a prefix and a suffix in my negatives, okay? It would just be if it's a negative expense, meaning it has a credit balance. But you would have to have different formatting than I would for the revenue line. So the revenue line, you would have right-clicked it, you would have said format, you would have formatted those negative, and then you had a separate line for your expense lines to format them in a positive manner. Again, you only need to do this if you didn't want to do the conditional formatting. I would tell you, the more lines you have, you are better off doing formatting at the line level than you are at using conditional formatting. The reason is your totals get jacked up and it really just gets too complicated. So if you know you have a complicated P&L with multiple different revenue lines and multiple different expense lines, and there's calculations based on those lines, you're probably going to have multiple revenue lines with multiple totals. Don't do the conditional formatting. Format the revenue lines as a -1, scale by -1. And then you just format the expense lines as a positive. And then you let the formatting take care of it.
Yeah, you also got to remember, you got to do the formatting on the math as well. So if you're doing let me add some revenue lines, list some more, sum those up, add those together, you still got to do conditional format, got to do formatting on the math there to say, yes, I'm summing up the revenue. It's still a negative number. I have to change that sum as well. So it's not just the account lines, it's the math lines as well.
Yep.
Same for like net income. When you're getting down to those levels, get the signs correct there.
Okay. So we showed you traditional formatting. We showed you formatting, talked about when and why you would use it. That's the general how-tos of the report building process. Lee's going to talk you through the income statement trend and how you do that using as few columns as possible.
Yep. So what we're going to do with the income statement trend, we are going to take the report that we're using already. With the one that we just looked at was I think we had like budget variance and variance percentage. Tom talked all through those. What I start with, if this trend report is going to look exactly the same as this, just with different columns, I will file save as and call it something else, and then start cutting columns. So I would take out my budget, my variance, and my variance percent column. I will also take my accounting period down from the page level. I'm going to take it down to the column level. So I could have multiple columns out there for my periods. Now, as Tom said, we appreciate brevity on these reports. It's going to make my life easier if I can have as few columns as I wanted. In the oldie days with FSGs and EBS, you would have like 12 columns out there, right? And you would say point of interest -1, point of interest -2, point of interest -3, so on and so forth to get all those additional columns. In cloud, we don't have to do that. We have functionality that will let us do that kind of stuff. Okay.
Come on. There we go.
Okay, so I've got my column. I put my column at my account. I put accounting period at my column level. I'm actually going to select a function out here. We looked at functions last week when we were doing get children of all companies, something like that. So I've selected my accounting period. I'm going to go to a function and I'm going to say a range. So I've got a range on the left-hand side and I'm going to drag it over to the right. As soon as I drag it to the right, it's going to ask for a few things. It's going to ask, what's my starting period? What do you want to start at? And I'm going to say for that one, I'm going to get a function. I want a relative member out here. My start period is going to be my current point of view. What report am I running this for? And my starting period is going to be 11 months before that. So as I'm building this report out, if I'm running it for June 2024, the first column is going to be July 2023. I'm going to go July 23, August 23, September 23, so on and so forth. So I've got that -1 in there for the offset. That's going to figure out where I was back in the day. And we're going to hit OK for that. We then say, what's my ending period? Well, I know that my ending period is the period I'm running this for. Again, using that example, running this report for June 24, I want to start it in July 23. The rightmost column is going to be June 23. So that's what we're picking there, the current point of view. If I run this report for January, it's going to say start in February, end in January. It's that kind of functionality. And I've got one column out. So I would have one column out there. You can actually see in column B that we have it out there. Now, I'm actually going to do some sneaky stuff in here as well. What I do for a lot of these reports, when I start doing ranges, typically you would want in the title of your page, you would want something like, I'm running this as of whatever period. But I've got a range. That period kind of gets a little bit tricky out there. So what I typically do is insert a column that I'm going to hide and say, this column is for accounting period point of view. Never going to be seen, never going to be used in math, but that allows me to say, and that's the column to aim for my accounting period. So it's a little bit of just a neat trick here of just trying to figure out how I can keep that consistency on all my reports, having all titled the same thing and actually getting the title to work.
That's a tricky concept. So if there's anybody paying attention out there that has any questions or comments, please do let us know, and we'll make sure we try to answer them for you.
Yep. Okay, the last part. So that's kind of putting in the columns, that's putting in the rows, that's putting in all that conditional formatting that we were talking about, getting everything looking pretty at the grid level. Now we're going to look at titles. So we've inserted a title at the top of this page, and most companies want the reports to always look the same thing. The title is always going to be the same. You've got report name, whatever I've called it out there for the period ending, for, for this ledger, for company, whatever. You're going to want a consistent look and feel in there. Again, I like copying these reports around when I start building it. I've got an income statement that I know works, the rows work, I want to play around with the columns. File, save as, call it something else and start moving on. That way your maintenance is going to work there. But that also holds true for the title. In this particular case, we have parameters out there. So I can say, let me get report name. Literally whatever this report is called, when you save it, you give it a name, whatever it's called is going to appear out there. You've got the two less than signs, report name, that's one of the variables you have out there, as of whatever my grid is. In this particular case, I'm pointing specifically on my first grid. Every grid gets named. You can actually rename it, but grid 1, grid 2, grid 3 on the report. I'm looking specifically for the member name in grid 1, column A, get my accounting period. That accounting period is a dimension. That gets us home there.
Thanks, Lee.
Okay. What does that get us? Tom walked you through the rows, how we would do the conditional formatting for those. I worked us through adding one column out there to get my range. We can see that it's broken out and it shows 12 columns out there. Now we do have an adjusting period. You can actually suppress some of this stuff. When you start looking at those, you can suppress those. We will look at suppression in a later session. I've got my report name looking really pretty there. But essentially, a really nice looking report as we see it there with maybe 3 rows, 1 column, gets you going through that, enables you to throw these reports together relatively easily.
So just for clarification, so everybody's out there. So Lee ran this report as of 01/23. If he didn't put that hidden column in there, the title that would have showed up would be the column A, it would have been 02/22. And that's not what he wanted. So that's why he put the hidden column in there. The second thing is, as Lee said, the column next to January 23 is an adjusting period. It is very easy for us to suppress that if we want. Now, I will tell you there is a danger to that. If you suppress that period and you've got transactions in there, obviously they're not going to show up. So if you've got a situation where you want to include that adjusting period, you could do some math as well. But if you want to include it in December, you can show it. I would tell you, if you have an adjusting period, there's no reason not to include it because it does provide a true statement. Now, again, if you're doing a trend balance sheet or a trend income statement, you're going to get certainly some wonky numbers, but just something to consider if it is meaningful.
Yeah. And that's what we're looking at. That gets us our rows, it gets us our columns, it gets us our titles out there, but it gets an income statement in a relatively quick time. This session, last session we had out there, it's kind of introducing this FRS concept out there. So Financial Reporting Studio to write the reports, Financial Reporting Center to run them. But it's starting to build that kind of stuff up. And typically on a Creel implementation, anything that Tom and I or any of our folks are on, we cover all this kind of reporting with our clients to make sure that they are able to run reports. We'll still build reports for them. It's part of our work, but we want them to be familiar with the tool so that they're not paying us, quite frankly, a bunch of money to build these out, where it really is a user-friendly tool. So hopefully you've seen today.
Yep. So a couple key things. I'm just waiting to see if there's any questions. These reports come out of the box. What I mean by out of the box is if your hierarchy is done appropriately, you simply need to run that program that we've covered 3 times now, and you'll get these reports and they do work. If you do not want to edit them, you can rerun this report each month and you'd get a set of reports for each month. Not something I'd recommend, but you could certainly do that. Really work with your systems integrator. If your systems integrator is unsure of these processes or they're unsure about your hierarchies, you really have the right to ask those questions. A couple other things that I kind of highlight that's really critical. When you're doing your conversions, if you're in the middle of your implementation, get your hierarchies right before you load your history in multiple periods. You should be able to build, in Excel using a pivot table. You should be able to build a report that looks like one of those seeded reports. And I would really urge you to do that. And the reason is at least it gives you a baseline to reconcile at your financial statement level that what you have in your legacy system ties what you're going to load into Oracle. A core tenet, Lee and I have, we're not big believers in loading quote unquote historical data into these environments. It's usually not worth the trouble. Certainly I will load financial data. We typically go back 3 to 5 years. I've had some customers that want to go back 10 years and, there's really no reason to do that. It's not auditable. But if you need it for your trend reporting, you can certainly do it. But the way you do that, you actually want to extract your latest trial balance, believe it or not, and load that first. Why is that? And if you extract your earliest trial balance, typically what happens is throughout the years, you add accounts, you end date accounts, and those accounts won't be there. Whereas if you extract your latest trial balance, at least at a balance sheet level, all the accounts that you should need should be in that account listing. So those are just a couple best practices. That's the session we have for today. What we've gone through is so far, we've gone through SmartView, we've gone through account hierarchies, we've done some really cool things with OTBI and connecting SmartView to OTBI. We've gone through FRS, and we've gone through running the standard trial balances, and then running and then creating and modifying the standard income statements. So we've actually covered a lot of ground in these 8 sessions. We have 3 left. They will be scheduled for later on in the summer or the early fall, assuming everything goes according to plan. And those sessions we're going to go over, I think, creating a cash flow statement through Oracle. I will tell you that you can get pretty close to a good cash flow statement using the indirect method from Oracle. Cash flow is a seeded function within EPM. They have direct and indirect method, and as long as you have the account set up properly, it does a pretty nice job. But ERP, you do have to do a little bit of work to build it. With that, I'm going to ask if there's any questions or comments from the group, and if not, we will bid you adieu. So I'm going to give everybody 30 seconds to ask any questions that you may have.
We can bid adieu to people rather than butchering it with your Americanness.
Sorry.
For all of our American watchers sounds the wrong term, observers, attendees, hope you have a great 4th of July coming up. For the rest of the world, sorry. But for at least for America, we hope you have a good 4th of July. And I'm not seeing any questions. Tom,
I am not either. Thank you for attending. We appreciate it. And we will see you on the interwebs at some point in the future. Have a great afternoon.